learn something new. If you do, stay watching. This strategy is a game changer and it's going to help you make a lot of money in the market. So first of all, we know that this is an uptrend, right? An uptrend is when price is going up. And then we have a downtrend where price is going down, right? So this is a downtrend, price is going down. Then you have this, which is called consolidation or a ranging market. Basically, when price is going sideways. Yes, you can trade it from the bottom to the top, from the bottom to the top, but basically you are just trading a choppy market. I'm going to show you the best way to get the most money out of this pattern. This is a pattern you're going to see every day in every single time frame. It's very good to learn and it's going to help you make a lot of money. So let's get straight into it. So let's talk about the BossinoBox. You can call it whatever you want. So the first note, it works on every time frame. 2, it has a very high win rate and also a very good risk to reward. The moves are explosive. Whether it's upwards, whether it's downwards, the moves are usually explosive. So that's why point number 4, it works best when scalping, right? The second thing, they appear during a run up. So when a stock runs up, normally it forms a box, then it runs up again, or it can break downwards, right? So during a run up or during a sell off. So when the stock or when the indice or whatever you're trading is in a downtrend, usually causes a box, carries on direction, causes another box right here. We have one down, another box right here, down, we have another box here. So yeah, I forgot to draw a box right here. You can see it's clearly a box, and as you can see, this works a lot, right? So during a run up and during a sell off. To trade this strategy, whatever you are trading, whether it's crypto, forex, stocks, an index, commodity, a metal, anything, whatever you're trading, it must have good volume. And it must have inside candles. I'll explain what that is right now. By good volume, I mean whatever it is you are trading must have movement, people buying and selling. There is several ways to check this, either using a volume indicator or a website such as marketwatch.com. It's very simple. All you need is to make sure that whatever you're trading is hot for the day. Don't trade something like corn, for example, or cocoa or something like that, right? Make sure it's something that has a lot of volume for the day. By inside candles, I mean this, right? This. After a rally or a sell-off, look for a chart showing you a bunch of candles which are opening very, very closely within each other. So for example, here we have a rally. There comes a point where you will see candles closing in between each other, right? So inside of each other, you will see candles. Now, it doesn't need to be 4 candles. Can be 3 candles, can be 5 candles, 6 candles, doesn't matter, right? If we go back here, you can see that it varies, right? Here, for example, we have a huge amount of candles and it explodes. Candles within each other. You draw your box around this area from the high of the candle, so from the high, to the low of the other candle. So basically, you draw a box around the high and the low of the candles. Okay, this is a wick. You draw your box from the line to the line and you draw a box. You wait for a breakout to either side and you enter for fast money. In the live trade, I show you how to enter, don't worry. But yeah, you can enter as soon as it breaks, or you can wait for the candle to close, come back to retest, and then it will fall. You wait for a break outside of the box, whether it's down or up. If it's in an uptrend and it breaks upwards, the move will be bigger. If it's in a downtrend and it breaks downwards, the move will be bigger. Some important notes to keep in mind. This works on any direction, but it works best when you go with the trend. Time frames, the 1 minute and the 15 minute is best for scalping and day trading. Anything higher than this, such as the 1 hour, the 4 hour, the daily, they take very long to come to play. If you're a swing trader, you can use something higher like the 1 hour or the 4 hour chart. Third point, if a stock breaks out of a box in the daily time frame, expect it to continue that direction most of the day. So if this was a daily chart, if you see that price has been in a box for a few days and it breaks out of the box upwards, then you can expect a green day for that stock. The other way around, if a stock breaks downwards from a daily box, you can expect a red day for it. This is mostly for swing traders and people that want to know the trend for the day, right? So if you're a scalper, just stick to these time frames. Now let's go over some live trading to cover how to enter and where to place your stop loss. So here's a perfect example of the box, right? And I caught this late. Okay, I caught this late. I was doing the video. As you can see, price breaks the box, comes back to retest, and normally the moves are more explosive, right? So normally the moves will go straight up and you just exit when you see that the price is slowing down, right? So a scalp. But if not, if you miss the initial move, you can wait for a retest, enter, and just hold. This is a slow scenario of the box which I'm showing you. If you wait for a retest, you enter, and as you can see, we are already in profit. Price has retested the box, and now it's gonna go over to a take profit. Literally this simple. And when playing the box, you have two scenarios where you can place a stop loss. Okay, so one of them is just below the box, and the other one is just below an area in the box, which makes sense. Like for example, these 2 wicks right here, right? So you place your stop loss within the box. We're already $110 up. It's going to our take profit. Now if you don't want to wait for the price to hit your take profit, you can just exit. Okay, you can just exit. You're seeing it live, right? You're seeing it live. And this was a weak one too, right? Normally the move upwards is aggressive, but sometimes it's gonna come back to retest the box and continue up. You can just close it right here, all right? Or you can wait for it to hit our take profit, and that is a quick scalp, a nice scalp. Or you can simply hold. You can move your stop loss up, etc, etc. Like I said, I'm going to do a video on how to ride the trade, so don't worry about that. But yeah, the box strategy is very good for scalping because you're literally in and out, right? The win rate is incredibly high. If it breaks downwards, it does the same as what you're seeing here. As you can see right now, this is a 1 to 2 risk to reward trade. It would have hit my take profit. For example, let me just buy a little shares just to show you what I mean. Okay, so let me just buy 10 shares. So for example, your stop loss started here. Once you see a big move, you can start securing profit, start moving your stop loss up. Okay, so you move your stop loss up, move your stop loss up, move your stop loss up, and you keep riding this trade. And as you can see, it's still going, and it's just an incredible easy strategy that really works, right? And honestly, this is something that people would put in courses to sell to you, right? I'm giving it to you free on the tube, so make sure to like, comment, and subscribe. I'm giving you an amazing strategy, which all you need to do is be patient, wait for the setups to come to you, and you're gonna make money. As you can see, we're still going. I wish I stayed in. Like I said, it's a very big green day for me anyway, and I'm super happy with the profits today. If you're in the school, you know I've been posting these box setups like crazy. And yeah, it's literally that simple. It works the same up as it does down. We're gonna go over now to trading view, and I'm gonna show you exactly how to find these box plays and how to draw them out, etc, etc. Let's get right into it. Right, so here we have a clear example of the box. Okay, listen, we have a rally, and just like the picture showed you, then we have a moment where price consolidates. It finds its ground. So this is a clear box. You can see it, I can see it, everyone can see it, right? A clear box to the high of the candle within the box and the low of the candle within the box. Okay, you have two options, and this is what I mean why this is best for scalping, because it's more of a momentum play. I'm telling you, once price breaks out of the box, it explodes, right? Most of the times, 90% of the times, price will explode. So that's why you can get in right on the break. You don't have to wait for candles to close. If, like in my live trade, the candle closes and you miss the move, wait for a retest. You wouldn't enter here or here or here because that's risky, right? So if you catch the break, you can start scaling in, you can enter a position. So scenario A, you put your stop loss below the box, which is how I personally like doing it, especially when it's a small box like this. Or scenario B, you can put it like halfway in the box. Just make sure that it's under structure, right? Here, I don't see any structure, so I would definitely put my stop loss under the box, right? So that's your entry. When do you exit? You have two options, okay? So let's say you entered on the break. Successful trade, you're heavily in profit, right? Heavily in profit. When do you exit this trade? So this is the same setup, right? It's just I dropped down to a lower time frame and you can see more candles, okay? So option one is you ride the EMA on the lower time frame, right? You ride the EMA on the lower time frame, such as a 1 minute chart. You only exit once price breaks below the EMA. So for example, as you see here, you would have ridden this trade, and this was a very, very successful trade. You entered there on the break of the box. Your stop loss goes just below. You exit when price breaks below the EMA. So as you can see here, this is the first candle that broke and printed below the EMA. Like a robot, you exit your position. This is not a break below, okay? The EMA is still in between. This is a break below. So as soon as the candle opens below the EMA, you exit, and you have a 1 to 4.5 risk to reward trade right there. And this is literally using that strategy. Okay, so option A, just to recap, you drop to a lower time frame once you get your entry. You ride the EMA all the way until a candle prints below and you exit your position. Now option B, you can ride the EMA on the time frame that you're using, right? So if you're on the 15-minute time frame or the 5-minute time frame, you just ride the trade until a candle breaks below the EMA. Okay, so in this case, this is the candle that breaks below, you exit your position. Now you're saying, but Michael, I don't really like using EMAs, I don't really like using indicators, I want to be more of a price action trader. Listen, that's fine. Option C, and even though I will argue with you and tell you you should use the EMA because it's better, you just ride the trend and you get out. Okay, yes, you can exit prematurely, but look, just be a robot and exit at the EMA. But if you don't want to use the EMA, or you're not used to using the EMA, you just want to use candlesticks, right? You look for the last resistance, and in this case that was all-time high, so there's no resistance. So if there's no resistance, like for this stock, right, there's no resistance, there's no candles anywhere on the chart, right? So how do you exit the trade? Use the EMA. So now let's look for a different box for option C of how to exit this trade. And now I'll teach you how to exit a trade using previous resistance, right? This is option C. If you don't want to exit using the EMA, this is how you exit. We have a box where price made a massive move down and now it's consolidating. Candles are printing next to each other. This is a box. What happened here? Price broke. You can scale in. If you miss the move, what happens? Price comes, gives you a retest. Okay, so it gives you a retest right here. Either way, your entry is good if you entered here or you entered here. Okay, your stop loss still stays either under the box or in the middle under structure. In this case, I would put it under here because we have a support right here. Okay, so you can either place your stop loss in the box under structure or just under the box, right? That is your entry. And how do you ride it if you don't want to use the EMA? Simple. Resistance is basically a historical part on the chart where price has trouble breaking over, right? So here price has trouble breaking over historically, right? We hit, we bounced, we hit, we bounced. Okay, this is a resistance. What do? You enter here, you put your stop loss here, and you exit at resistance. So you exit right here for a 1 to 2.5 risk to reward trade. Now as you can see, even if we rode the EMA, you would have got more or less the same exit. So it's literally just whatever you like doing. You can exit at key levels or you can exit on the break of the EMA. Just to recap again, you draw a box, you wait for price to break, you either scale in on the break. Keep in mind, getting in on the break is risky. There is a chance price will reverse on you and you have to place your stop there. If you get stopped, you get stopped. Benefit, if it rallies, you don't miss the move. Second option, you can get in on the retest. Okay, on the retest. Benefit, on the retest is way safer because price has successfully respected your area. It's respected your box. Downfall, if it does a big move up, you miss it completely. So you have to pick the type of trader you are, if you want to go in more aggressively or if you want to wait for the safer setups with the retests, then you wait, right? I'm telling you though, with this strategy, most boxes are explosive. They normally explode once they break the box. What I personally recommend is if you're gonna scale in on the breakout, go in with a few less shares, and if it comes back to retest, you can add other shares. So let's say you want to buy 100 shares. Once it breaks, you enter 50 shares. If it rallies without you, at least you're in 50. If it reverses on you, you're only in 50. So your risk is less. If you enter 50, it comes to retest successfully, you enter another 50 and you're fully in for the trade. On the break, you enter half your shares. On the retest, you enter the other half. The benefit of entering 50% of your shares on the break is if price launches without you, at least you have 50 shares in. Me, most of the time, I enter just on the break of the box and I found that usually it explodes up, right? There has been cases where I've entered and it's reversed on me and I had to either wait longer or I got stopped out. So yeah, that is a strategy. Try it out, you're gonna love it. So this is an example of a fake out, right? An example of a fake out. Price broke above the box, you would have entered. Quickly it wicks back in and it goes the opposite direction. That is the danger of entering as soon as it breaks. But this is also okay, right? It's also okay. If you enter, you get faked out, take a small loss, and you enter the opposite direction once it breaks. Okay, you've entered 50% shares only. Remember, 50% shares. You got stopped out with little risk. Now, before you try this strategy, what I recommend you to do is go back and look at your charts, right? Look at charts, look at the history, look how this strategy works, right? Look how this strategy works. You can go on any chart and I guarantee you're going to find the boxes everywhere. All you have to do is be patient and execute when they appear.